I crashed. OBS crashed. So I've got to go and monetize this next one. My apologies that it crashed, but this happens from time to time. We are dealing with software. Nothing is perfect. So, and I can't restart a stream once I say I can't restart a stream once we're going to close that one. And we're going to restart. Yeah, my apologies. I think I went through Pineapple Energy. So I'm going to start ISMN. Let's see. OBS crashed. New DELL earnings. There we go. Okay. People will figure it out. It will come back up on their screen. And I'm going to hit record again. My apologies to anybody who was live. I crashed. But I was starting to talk about INSM. This is one that yesterday went crazy, up 118%. I watched the CEO on CNBC last night. I liked his explanation. He was humble. It's a drug that shows great promise with a lung disease that has zero treatment. They use a process that can help with other diseases as well. This is similar to GLP-1 being a diabetes drug. And then they find other uses for it. It's called DTP1. And if you want, you can Google that. But here's a couple of articles for you. Insmed Gold with phase 3 biochemist win, rating upgrade. This is an analyst who is a biopharma guy. I am not a biopharma guy. This is one who is a biopharma guy. So if you want this stock and you think, oh my God, it's up 118%, it's down 1%. There's probably still more upside in this one. This is the article that you want to read. You know, find the places where you have you can do the work. And DTP1 inhibitor, right? It showed significant efficacy in the phase 3 Aspen study for treating NCFB. And there's, again, the CEO said there's probably other drugs. So what do they do today? They were up 118% yesterday. They announced a dilution. Yeah, I mean, that's what you do as a good business person. That's what you do. When your stock is up that much, you absolutely do it. So, you know, am I buying into this one? No, I'm not a biopharma guy. Would I have traded this one? Maybe. I mean, you could have actually probably traded. I mean, we can go over again using TrendSpider. We can go over and look at the 65-minute algorithm. 65-minute algorithm, it got you out and then got you in at 49.95. You're not making money on it, but you know, again, you're trading in pre-market at $48. So do you have upside? You could have traded it with this one. Again, you could have traded it with the 5-minute A+ setup. We can go and look at that one in the after hours and during the day yesterday when it was trading. Did you have an opportunity to buy in? I mean, you bought in at 22.52. You did not know about the trials, you know, on Friday. If you wanted to buy in on Friday afternoon, no, you didn't know about it. Could you have gotten in here, you know, at around 48, 40? Yeah. I mean, it was already up 106%. You had a couple of times where you could have made 1 or 2%. So again, you want to find stocks that move. This one just didn't move enough. It got the results and then it didn't move. So for something like that 5-minute, you want something that moves, like the Pineapple Energy. Now, take a look at this. We talk about Celsius a lot. A lot of you guys love Celsius. I am not drinking something with artificial sugar in it. Something that is is an energy drink that has caffeine. I am normally just high based on life. And not on edibles, even though I am an edibles guy. I will not smoke anything. but I will do edibles. Celsius slumps after Nielsen data cools off a bit. PepsiCo also lower. Remember, Celsius and Pepsi, if you haven't subscribed to my newsletter, that is the focus of this Motley Fool 10-pick article. One of them is Celsius. And I go over in detail about how the partnership with Celsius and Pepsi will link them together. Morgan Stanley has cautious near-term views of Celsius. The firm sees a robust runway for Celsius from the U.S., increasing items per store, improving costs, blah, blah, blah. Shares of Celsius were down 13% yesterday. And then you have this one, that it paired losses after several analysts called the sell-off overdone. CELH. That is the symbol. Let's take a look at it in TrendSpider. How are you going to play this one? And I said this. This is the chart that I posted in the paid newsletter. And I said I wouldn't buy it here. It's too high. The cap right now, if you were to buy it at 96, and I put this in the newsletter, the paid newsletter, 96, I said your top point, your resistance is 99. It's got a double top right there. Hit 99, bounced off. That was the all-time high. I said this 68 provides you support. Today, in pre-market, let's see, it is up, down 1.71. It's at 81. Algorithm just got you out with a 14% gain. That is fantastic. If you like stocks like this, the 4-hour algorithm may be for you. Because performance, it's 181%. Does it beat buy and hold? No. Buy and hold makes you 241% over 24 months. 28 positions during that time. I said it before, you can find trading ranges like this and you can find good entries on the algorithm and you can buy and hold for a longer time if you believe in the stock. And if you bought down here at 53, 52, 52 again, yeah, those were part of the losses. Even at 57, part of a loss. And then you started adding to it during that time while we were in this trading range. And then it breaks out. Where were you selling? Because the previous, all-time highs here at 72, where we got to at 68, I think this is the support level that you're looking for. Now we're trading under the 50-day. This one doesn't trade under the 50-day many times. Now take a look at the weekly chart. And we look at that range right there. It was in a range. It broke out. It's pulling back now. Is the MACD way too high? Absolutely. Is the RSI way too high? It's coming down. It's at 56 now. You have to know these things. Understand you don't need TrendSpider to look at these indicators. They just put it in a great way that you can look at it. So that's why I like it. Again, Celsius, I don't think it's a bad one to play long term. I'm just not the guy that's going to buy it. I own Pepsi, and Pepsi's part of that Celsius crew. So as long as Pepsi and Celsius are in a group, I drink Pepsi. I don't drink this, and it has real sugar in it. So that's why I bring up Celsius because you guys love it. I'm just not a fan of that stuff. And again, it's just me. Now, American Airlines stock slid 9% on adjusted gross profit. Do you want to buy the dip in this one? I would argue that airlines are a trade. And here's a chart to show that. Look at 10 years, okay? Just VOO is up 225%. There is no airline over 10 years that is even close to that kind of growth. Maybe Spirit Airlines or some of those other ones that have startups. Airlines are not investable. They are tradable though, but not investable. So let's look at American Airlines since they're the big one that's getting killed because they're the ones who brought down their revenue. Now, you look at TSA and it says, hey, we've had our best year ever, or best day ever on Friday with the people passing through the airports. That would be good for the airlines. Here over 24 months on American Airlines, you lose 24% if you bought and held it. The algorithm at least makes you 3%. You've had quite a bit of little ups and downs. I would say it's a trade. Again, your average win is 10%. You only win 34% of the time. Right now, you don't want to get into these things. You want to wait for them to pull back even more. Look at Delta. Delta is actually a great example of the 4-hour algorithm. This one trades really long swing trades. And you can see it just got you out with a 35% gain. You know what? Over 2 years, Delta makes you 99%, 21 positions. So you're not even trading once per month. That's what I say. It's got nice long runs. You can see back here, it's not perfect. You win 33% of the time, similar to American Airlines. But this one, your average win is 20%. So again, I like ones where it works and it protects you on trading. Am I getting into this one? This one you may get into sooner rather than later. They didn't bring their forecast down. They're not saying they have problems like American Airlines. Delta out here in Atlanta, you can't get on a freaking plane that's not full. So I would stay with best in class in that one. I would not trade the airlines. This is it's not my thing. Maybe your thing. You can actually make money on it. Just don't buy and hold. Don't think that these airlines are going to be something that you're going to kill it on. Something you will kill it on, energy. ConocoPhillips is looking to buy Marathon Oil. I mean, Marathon Oil is up 10% at 29. Now we can look at Marathon Oil. This is one that is in the watch list for all of the energy trades that we have. Now this one just got you in at $26.21, but you're all the way up here at $29. So if you were scanning the algorithm, yesterday afternoon, maybe in the post market you bought at 26 because you said, you know what, Marathon Oil, I've been waiting for it, and these other buys, we didn't really have confirmation. This 26.21 afternoon candle, you had confirmation. Now, ConocoPhillips, we can go and look at that one. These are going to close, I think they said 2025, so it's still a long ways out. They need regulatory approval. There's some issues with that. It is what it is. But you can see ConocoPhillips, MACD, way down. RSI, down here at 38. It looks like a good buy to me. When you look at a weekly, still looks like it's in a strong upward trend on a weekly. Just looks like it pulled back to the 50-day. What happens for the last couple of years when it pulls back to the 50-day? We continue up. Again, you've got to find these things. Now, a couple of things that I want to talk to you about. One thing is taxes. Ross, this is like a 15-minute video, and he does it way better than I ever could. We've talked about taxes around tax time. You should have an idea today what you will pay in taxes next year. He goes over a great example. I don't think anybody that listens to me has the money that I have. If you do, then you shouldn't be an LLC. You should be an S corp. I'm not an S corp. My money is basically in my own stuff. It is what it is. But I've got a different thing. Ross is somebody who makes like $10 million a year. So I'm not too in his category. But yeah, and most of my stuff is not based on this podcast. Most of my earnings are based on, I'll go over how much I made at some point in time on the podcast. I did really well in Q1. Q2's coming back down to normal, couple $1,000. It's not a crazy amount. But I do, it's all on affiliate stuff. So, and I don't ask for a lot. I really don't ask for a lot. But this is a masterclass on how, you say you make a 20% gain. He goes over it. Say you make $100,000 on trading, and you're in a high income class. You may owe $30,000 on taxes, and then say, it's January and you've got that $100,000 still invested and you haven't pulled the money out for taxes, and all of a sudden we have a 40% correction, and so your $30,000 tax bill comes due. Maybe you don't even have the $30,000 to pay. This is why you need to track your taxes. So I go over it all the time. Now, how are you funding your trading account? This is a great 30-second, 1-minute video from Mark Tilbury. I don't like the guy. I think the guy's a douche, major douche, but he says it very well. Spend $5 on your coffee. Spend $10 at a food truck. Spend $20 on the spa visit. He goes over a lifestyle. And he says, if you take that back, cook at home, bring your lunch to work, skip that afternoon snack. He goes over how you can fund and make $1 million by the time you retire by just cutting back lifestyle. I went over it in my FIRE podcast. I have a FIRE podcast. It's out there. It's like 3 episodes. Once I got past the, limit your expenses, maximize your income, and then do some other tips, I just didn't know what to do. So I think it's like 3 episodes. It's really good if you want to know how I live. I think it still rings true. Maybe I'll do an update at some point. Now, Ross had a great one. Do you want to buy the dip? This is good. He is a momentum trader. He doesn't buy the dip. He buys momentum. So when a stock dips, he doesn't buy the dip. He goes over this great. And again, I'm including this because he's releasing a bunch of these little things. And I think they are very good. Would I buy his course? Absolutely not. But I think he does a fantastic job in putting this out there. Now, your portfolio, if you want to watch one thing, your portfolio needs to absolutely have single stock exposure to Apple, Microsoft, and NVIDIA. And this is what Dan Ives is preaching. If your portfolio doesn't have single stock portfolio exposure to Apple, Microsoft, and NVIDIA, you will underperform SPY. I mean, it's just that simple. If you only have, say, SPY and an industrial, you're going to underperform SPY. You might outperform SPY if you have some type of other growth names and you get lucky. But for the next 10 years, Apple, Microsoft, and NVIDIA, those are the 3 that you really want to have single stock exposure to. And he pointed out, so go to my my Twitter and look at that. HubSpot. We've talked about this one for a while. It was up at 8% yesterday. On reports, Alphabet is in talk with all stocks. This has been for about a year. That at least a month that Google and HubSpot are in talks. I think HubSpot is a great buy at that, just for that reason. HubSpot is a competitor to Google. They're going to just buy them. Now, will they get regulatory approval? Who knows? This is going to be a hurdle, but Google most likely will buy them. HubSpot has been a stock that's on fire. Is it worth it? Well, here's the high. These guys are going to pay $800 a share because that was the high in November 2021. If Google's going to buy them, it's going to be at that price. That will surge this stock. Just simple as that. I mean, take $1,000, take $10, take $10, and then you'll be wishing that you put $1,000 in there. And boy, if you have $10,000 and you put in $1,000, you're going to be wishing you put all $10,000 in. This isn't, this one isn't rocket science. They've been in talks. Now, if the talks break down, expect this one to come down to 400. That's why I'm saying limit your exposure, but take the chance. Put a little bit of money in there. So let's take a look. I want to go back to PEGY, and because I have in my notes, hey, before we go into the earnings stuff, let's check the 5-minute algo to see if we're out of that trade that it got us into here at 28. Now, well, it got us out with a 6% loss. But, again, I would say we haven't had an A+. I would say this buy right now with an A+ setup. The only reason is that it's gotten a little bit over its RSI at 50. I would say at 28, you're not bad getting back in there. But don't go big. Play with a little bit. The week ahead, let's look, because this was a post that was made. Hello group, Wednesday, Salesforce. So today you have CRM. Headlines with the week Q1 update. We can go over to earnings hub, and we can look at CRM. ANF killed it, by the way. We can look at that stuff later. But let's click on CRM. CRM is Salesforce, and they're up 0.11 in pre-market. They report after the bell today. What are they going to report? Well, last time they reported $2.29. That was a 1% beat. This time it's $2.37 expected. $9.15 billion in revenue. That's a slight reduction. Let's go look at the chart. CRM, I think it's close to, well, we're going to go back to the 4-hour. This one you would not want to use the 5-minute on. But we'll look at the 4-hour here. The 4-hour has some weakness right before earnings, got you out. The MACD, relatively normal space. You're at 269. The RSI, relatively oversold at 31. Algorithm doesn't have you in. If you wanted to take a chance, you don't have confirmation. But I do think that 260, 270 kind of range, probably not bad for the long term. For short term, you might be looking at a cap of about $316. So if you want to buy at 270, 316 might be your top. That might be the absolute top. If you look at this one, if you bought back here in November 2021 at $310, you could have gotten out, here back in March because it made it back up there. We're looking at a long-term recovery right now. You're seeing this 50-day cross down on that 200-day, made, even further move down. Then as the 50-day started to move up, you can see it crossed up and it started moving positively. On that 9-day, you had confirmation on this one all the way up here to 231. Then you lost your confirmation. Bollinger Band cinched up. It was indicating that we were going somewhere. Went down for a couple of weeks. Then we shot up from 230 in January all the way up to 310 again. We double topped out. It rejected off. I would say that is your cap. So if you bought here at 270, I think 310 is your cap right now. Simple as that. I mean, that's a nice 10% move, but that would be your cap. That would be your cap. I don't think it needs to go anywhere else. Now let's look at Thursday. Costco. Costco slated to report consensus earnings per share 371, blah, blah, blah. This is a big one. Costco's a huge one. They have run up incredibly. This is one that is now trading over $800 just a couple of weeks ago. I got this at $730. I bought this back here in April, so maybe it was a month ago. But we're up 12%. And I've said I want to sell this one as it weakens. It hasn't weakened. But as we get up here, I'm slightly concerned that the MACD is high on this 4-hour. The RSI is at 67. If we look at the weekly, we are at all-time highs. That makes me nervous. I need to trim. They report tomorrow. I don't want to trim if they're going to announce a member raise. Now, do I think we're coming back down to 700? I can't imagine, with Walmart earnings being good, with Target earnings being good, with the traffic continuing to come in. Go to a Costco parking lot on a Saturday, you can't find a space. So am I concerned about it coming back down to 720? No. Am I concerned about missing that bump up? Yeah. I mean, this one right now just doesn't have a top. But am I buying it? Absolutely not. It is too expensive to buy right here before earnings. Might get cheaper, but you don't want to buy it. Now, some other ones that report tomorrow. DELL. DELL is one that is expected $1.26. Last time they reported $2.20. What I want to point out with DELL is, and Marvell reports tomorrow, Zscaler reports, Best Buy, we had a scan up on Best Buy. DELL right here, if we take a look at DELL, this is an interesting chart because everybody talks about SMCI and NVIDIA. Well, what you didn't know is that DELL is number 2 in the server space, right behind SMCI. And I was going over it on YouTube Live just a little bit earlier about how I'm losing a little bit of patience with SMCI, but they do have a runway of 3-4 months, and we're only in month 1 or 2 of that kind of sideways trend. But if you look at this over 1 year, NVIDIA is only up 184%. And I say that because SMCI is up 273%. DELL is up 258%. Okay, so a couple of things have to happen. Either SMCI and DELL have to come down or NVIDIA has to continue up. You look at the year-to-date stats on this one. And year-to-date stats on this one, oh, it's going to do that. There we go. Year-to-date stats on this one, SMCI up 207. NVIDIA up 130. DELL is in behind at 118. So in my mind, I think DELL is probably a good play here on earnings. I don't mean that you should buy it before earnings. I mean, you wait to see if they blow out their server space and they announce that, hey, our new partnership with NVIDIA, we're going to be their leading server installer. Boom, take off. And you're going to see SMCI fall. So in my mind, I tend to fear for the SMCI play. I am happy that I also own DELL. Simple as that. I mean, again, I've got both. So it's a little bit hard, but earnings today, I said it yesterday, I thought Dick's Sporting Goods was going to kill it. They're up 10%. Dick's Sporting Goods, Great buy right here. We know DKS is the symbol. We look at that. It's going to create a gap. Your top is going to be 225. I mean, that is where you're going to top out, 225. If we continue to go up, you will top out at 225. So should you buy at 212? No. No, you should wait for it to come back and start to cover this gap. But the top is going to be 225. This was a setup that was absolutely stellar. 194 right there. 194 in the afternoon yesterday triggered. That is fantastic. That is a MACD that is below the oscillator. That is an RSI coming off an oversold reading of 28 with a nice pullback and a gap cover, earnings gap cover. That is stellar. And then good earnings. This one's getting ready to move higher. But right now, 225 is your resistance. It's getting ready to move higher, though. I mean, right now, do you want to buy at 217? I would say no. 3-day rule. Be a little bit conservative. I would be slightly conservative, but they killed it. They just killed it. You know who else killed it? Chewy. Chewy killed it. They're up 13%, 14%. Chewy killed it, and they announced a buyback. I mean, Chewy, I had said it, that I bought Chewy. I bought my dog food and some probiotic for the dogs from Chewy. Fantastic experience. I just didn't trust it this low. I think this gap here starts to get covered at $20.58. I think when you look at that, you look at the weekly of this one, and it's an absolute mess. An absolute mess. But I do think this one, not a bad one. Not a bad one. You know, that earnings with a huge buyback, if anything, look at the buybacks that they're talking about. Now, ANF killed it. Killed it. This is Abercrombie and Finch. They are up 6%. They killed it. Look at this. If we go over here and we look at ANF, they 23%. 23% beat. A 23% beat. 6% on revenues. The consumer is picking brands. So you have to understand those are the brands that you want to do. Now, we went over CRM. Let's look at HPQ. HPQ is one of our, let's see, who wanted it? Dex. Dex wanted HPE. We want HPE. But let's look at HPQ. HPQ right now is, HPQ is, they're expected 81 cents. That's what they reported last time. I'm not a huge fan of this one, but maybe you want to play it. Alpha Pick Okta. Some people got into Okta. You know, last time they reported 63 cents. It's brought down to 54 cents. Just about the same revenue. Nothing different. If we do go and take a look at Okta here on the chart, Okta is one that the last earnings got a nice bump up. We started to cover that gap, and it got you out with a nice 3.7% gain, 21% gain on that one the time before. The MACD kind of going lower. Doesn't have any confirmation. If you like Okta and you bought here at 88 and you didn't sell it down here, maybe you want to buy at 95 in dollar cost average. This one might be an opportunity for you to dollar cost average this one. The 50 days moving positive. Can't say that, you know, hey, between earnings, it does trade kind of crazy. Not in love with the chart, but maybe you want to trade that one. You know, go over to earnings hub and take a look at that one. Tomorrow morning, and we'll go over one here. Best Buy. This one's interesting. Now, they reported $2.72 last time. They beat by 8%. $1.08 is the expectation with $8.9 billion in revenue. Here, $14 billion in revenue is what they reported last time. If we go over to Best Buy and we look at the chart, it got a MACD cross up. So, do we want to buy this one on the 4-hour with a MACD cross up? Doesn't have huge confirmation. Let's see. In the pre-market, it's at 71.66. So it's even below where it was trading here. MACD crossing up below the oscillator. RSI kind of oversold at 43. If we look at the weekly, doesn't look fantastic. Looks like a trading range has come in. You're below this 200-day. Will it get back to that 200-day? I don't know. I mean, it's a well-run company. I go into Best Buy every now and then. I don't buy anything in Best Buy. That's why I'm not buying it. I did buy over the holidays. I bought 2 iPhones for my parents. Fantastic experience. Fantastic experience. That's an interesting one. By the way, I'm noticing Cleveland Cliffs is under 20 again. It's at 16. And we identified this trading range here. If we shrink this down, we identified this trading range right here between 13 and 22. This is coming into an opportunity. So you want to keep an eye on your watch list as well. David's Homer from Spotify wants me to look at Vistra. Vistra is VST. I think this is the AI play, Vistra, if I'm not mistaken. I've gone over it before. Let's see. I think this was a alpha, seeking alpha. It's utilities. It's power. This is your AI play. I mean, I've gone over this many times. You may have missed it. Go over to the newsletter and just type in Vistra. Go and look at some of these articles right here on Seeking Alpha. It's a good one. I mean, you look at, it's a hold based on the valuation. The price target is 105 from Wall Street. You've got 11 analysts over the last 9 days. Look at their revisions. Two of them up, one down. Two of them up, two down. So it's about flat. It's just how to run. Maybe you want to play it in the 4-hour algorithm. 4-hour algorithm has you in at 70%. 4-hour algorithm makes you 193%. Buying and holding makes you 309%. Simple as that. I mean, again, it makes you 309%. If you believe in it, you can hold it. For me, a volatile stock like this, I'll trade the 4-hour algorithm. And I'll say, you know what? You win 30% of the time. Your average win is 30%. If we go and we look at the average win of 30%, where are you now? You're 48%. Do I want to play that one? MACD super high, RSI overbought at 69? Probably not. So, David, I think it's a good long-term play, but it is what it is. It's just run a lot. Shep, I dumped Shopify at the loss, bought NVIDIA with the cash, and I'm already in the money from the original Shopify buy, and losses are history. Is DELL a double from here? I feel like buy more NVIDIA is the only way. You're talking about two different things. So if you're talking about buying NVIDIA, you're talking about buying the chip, and you're talking about buying the split, specifically short-term. And Shep, it depends on your time frame. NVIDIA, if we go and we look in Seeking Alpha and we look, it's still, I think it's a hold. Yeah, the valuation is still a hold. It's really good. I mean, this is one that's been a hold forever. Do you want to buy this one or SMCI? You want to buy NVIDIA. Now, do you want to buy DELL? DELL is kind of the same thing. I mean, it's growing, but it's still a hold here. It's 52-week range. You're at your 52-week high. Do you want to buy it? I mean, you're at your 52-week high on, NVIDIA, but you've got some pretty good catalysts. Depends on the earnings, and it depends on your time frame, Shep. Do I think it's double? No. Could it be? Yeah. I mean, we just went over how good it was doing. So Dex wants me to look at HPE. HPE is Hewlett-Packard Enterprises. HPE, from a Seeking Alpha standpoint, we can look at it. It's a hold across the board based on growth, and we can look at that. 52-week high is 20. So that's kind of what you're dealing with is 20. Revisions, it's just got bad revisions. Everybody's revising down. So if we go and we look at the chart, I can't imagine that it's good, but it's not horrible. It just looks like a trading range before earnings. So, I mean, again, this isn't one. Algorithm makes you 51%. Buying and holding makes you 18. It probably should have gotten in at 1702. I mean, if this is one that you're actually watching, then watch it in something like this. Understand how the chart moves. And you win, average win 7%. You win, 41% of the time. So it's not a bad play. Not a bad play at all. Again, 7% is your average win. If we look at this one from 17 right here, right before earnings, you're at 8%. Do I want to get in? Probably not. MACD above the oscillator, not horrible. RSI, it's coming off and overbought. 74, it's coming down. So it is what it is. Bullish bites. Who called Robinhood, by the way? They had a great call on buying Robinhood before the buyback was announced. But they wanted me to look at Chubb. Thoughts on Chubb Insurance now that Buffett disclosed his position? Can you include it in the pod today? Yes, I can because you got it in. CB is Chubb Limited. Now, This was the hype. This was when it was announced that, hey, Buffett took a position and you had a nice gap up. You'll retrace it. My guess is you'll get that back down here to 253. From a long-term perspective, it's been a winner. I mean, do you want to buy up here when the RSI is at 10, or I'm sorry, the MACD is at 10 and the RSI is coming off 72. Right now it's at 62. Chubb, if we go over here and we look at Chubb International, which is the symbol CB, we look 9 revisions up, 9 revisions down, 6 revisions up, 1 revision down. If we go and look at the summary here, we can see it's a D on valuation. Quant has it as a strong buy. The growth, C, is insurance. Upgraded to neutral of Bank of America. This was last Thursday. Your 52-week high is 275. If we go over to Wall Street and we look, your price target is 269. That's 2% upside. That's where your 52-week high was. So in my mind, it's a little bit stretched, but the Buffett factor can't be outdone. He was adding it. If he was adding it during the entire last quarter, he was adding it at a lower price. He's been adding Oxy for the last 12 months. This one hasn't moved. And you've got weakness on it. So it depends on which Buffett play you want to do. Chubb, it's insurance. Insurance has been flying. Insurance secretaries of state have been approving huge increases on insurance. Look at your auto rate insurance. Cars have become more expensive. Tesla has finally found out that insurance is a tough business. So it's a little bit tough to say, is it a good buy or not? It's just run so much. And do I want to buy something just because Buffett got in? I think there's other plays in Buffett, like American Express, Apple, other big plays that I think have better opportunities than Chubb. But I'm not Warren Buffett. Again, Apple, we've talked about the 198 being the cap on this one. It's up almost 1% today on a down day, on a very down day. The Qs are, the Qs are down 0.79 and Apple's up 0.6. So let's talk about some scans. We got Best Buy, we got Micron, we got Ulta before earnings. Ulta is reporting, I think Thursday as well. Thursday as well. And that is after the bell. So Ulta, weakness. Does it come back at all? I mean, buying into Ulta on earnings where it's super, super weak, this one could be an interesting one. It's come back under the 200-day. What's happened on the weekly every time it's under the 200-day? It's come rip-roaring back. Do you want to buy that one? I mean, the 200-day still moving positive. RSI, crazy oversold at 30. MACD, crossed up. This was a great move. We talked about this one. This was the double top at 558, and it had trouble holding it, and it's pulled back since. Interesting play. I don't know that I still hold this one. Why I hold it, I don't know. It's a small position. I shouldn't have gotten into beauty products. ELF was the play, but I shouldn't have gotten into it. I should have traded ELF, not buy Ulta, buy and hold Ulta. It was just a dumb move on my part. Micron, they have a cross up. MU just continues to make all-time highs. Again, you've got to identify where these stocks are. Tomorrow, if you've listened to this part, you can comment below if you want me to go over Intuit. My father holds a lot of Intuit. I've gone over this a few times, I think, around tax time. Intuit on its earnings, it dropped. Is it an overreaction? I don't know. I don't think so. But I called my dad last night and I said, hey, I noticed that you're up 120% on your Intuit buy. I think it's time to look to trim. And we should have been trimming around this time where it got to highs and it broke down at 672. But at 607, I'm ready to start trimming and looking at trimming. I just think that some of this gap up here might get let go. I will not get out of the total position until I see it start to actually drop. Right now, 3 days, and we've got some green candles. It's up 1% today to 607. I think you've put in a nice range here. You go back to 2023, and we look at this. This is this is a 4-hour chart. You go back to 2023, and you've clearly got this little range that you're trading in. Now, do I have faith that it will break out of there? No,
But when we go and we look at the weekly and we look at this, it looks like it's just weakening down. So we've hit, back here in 2021, you hit all-time highs at about 700, 690, 700, somewhere in that neighborhood. You're clearly coming up as a resistance around 670 now. It doesn't want to push to those all-time highs. And your MACD going down. Is it getting ready for a move higher? Could be. Bollinger Bands have cinched up. I will be looking at this one closely. So if you want me to look at it a little bit more and tell you what I do about it, just comment down below and let me know. But that's one. Energy stocks, we have crazy ones. A couple of leveraged ETFs got interesting call outs in the 4-hour algorithm. Bulls, B-U-L-Z. This is one that it got a buy here at 103. Well, it got another buy, and you're currently in it. It got another push up here. I don't know that I necessarily would have bought it up here, but the algorithm said, hey, you may want to look at this one. RSI's at 60. MACD's a little bit high, but I thought it was interesting because it's pushing up here towards 140. Now, this one, you make 221% over 24 months. Over 24 months, you make 221%. Your average win, 24%. You're at 32% right now. So do I want to really buy this one? No. Look at that incredible volume spike. And this is a triple leverage daily ETF on FANG. So Bulls and FNGU. This is a triple levered ETF on ETNs. FANG index. But it's the same kind of thing as Bulls. So it just depends on which one. We don't have those volume spikes on this one. But again, this one makes you 308%. 308% over 23 positions over 24 months. Your average win, 29%. You're at 33%. We need a pullback. And if you're one of these people who wants to sell out on a pullback, don't do it, just trim. Because you never know how far the pullback will take us or when the jump up's going to take. But these RSIs and the high MACDs, they're worrying me. Simple as that. If you have any questions, hit me up. I will be back tomorrow. Okay. Talk to you later. Bye. Okay. I gotta go. Oh, I'm exhausted. Hey, Pavin. Good morning. Snow is an interesting one. Let's see. Snow. I gotta edit this together now, too. Sorry about the crash if you rejoined. I will be adding more to Snow, but not right now. They had their earnings, got you out with a 3% gain. I did not get out. I don't necessarily listen to that one. I like this trading range. And I think it will pop back up to 200. I think Snowflake will pop back up to 200. I don't know when. Listen, this one, it took from June to September. This one, if you bought on the way down here, all the way from October, it took, you could have gotten out in June of next year, but it took all the way till January. October 2023, October 2022 to January 2024. So it doesn't move fast, but it moves. And so I do like this kind of range here. Now, it's expensive. So it needs some type of momentum and some catalyst to actually get financials, revenues, valuation. There we go. See, the PE is 157. I mean, even the forward peg is at 9. So they need to grow a little bit more to justify that valuation. But I don't think there's any problem. The revisions, it's an F. They brought the earnings per share down, 35, 34, brought it down, revenues. So it's one of those where I put a little bit of money in each time. I'm not looking at it to trade it per se, but I am waiting for it to pop to 200 to trim my position and just make it. I think this is a good long-term data company. So that's my thought on it. Hey, T-Dog. Wow. Morning, Brandon. Oh, boy. Oh, my back just cracked. Potential spam. Somebody's calling me from Montana. Welcome back, T-Dog. I unfortunately am going to get going. I'm feeling the mono. I'm feeling my energy levels just sink. If that's what I got. I don't even know if that's what I got. But I will talk to you guys later. Sorry about the crash. I'm going to restart the computer now. Okay.